Sandip Sabharwal is ready. Let's connect with him. Kunal, 23,800 looks like it's going to be tested again.
Yeah, should be tested again, and I think we should be breaking past about those levels. So I think we should be ready for 24,000, 24,200. There are slew of events at the start of the month of April, and the way the markets have panned out in the last 4 months. So that backlog of that major OI selling, which was happening for the index as well as for individual stocks, that's now behind. And I think we should be looking out for much more positive outlook, at least in the start of the April series.
Sandip Sabharwal has been bullish and he's been right, and let's understand if he's still bullish. And why do I get a sense that he's made a lot of money in the last 1 month? When you see Sandip Sabharwal smile, means bhai chakka laga, right?
I'm always smiling.
Sorry?
I'm always smiling.
When you're smiling like this, the way you're smiling. Or maybe I'm doing the closing show after a while actually, so maybe. So how markets looking?
Markets are fine. I think still people are quite fearful of Trump tariffs, what's going to happen on 2nd April, and there is generally a feeling of negativity. So I think people have closed their minds to a lot of macroeconomic developments, which include the kind of flexibility we are seeing in monetary policy as well as forex policies from RBI, positive news flow coming from the new head of SEBI in terms of facilitating FIs, talking to them, understanding their issues, etc. And on top of that, I think we've had a very tough macroeconomic year, like financial year, due to tight liquidity, a lot of elections, a lot of uncertainties related to first the Indian election, then the US elections, etc. So I think a lot of these things will not be there going forward. So markets cannot keep on falling on tariff word every time. So I think you can say tariff ad nauseum, but eventually I think the incremental impact on the markets keeps on reducing. If there is some resolution of the global conflict involving Ukraine and Russia, I think that also will be a good overall positive, because a lot of Indian businesses could gain out of re-entry into the Russian economy and doing business out there. Oil prices could get capped because of that. I think overall things are not bad at all. So I don't think we should be bearish.
Right, things are not that bad. Doesn't merit to be bearish at this point in time. Kunal, that's what the charts are telling you as well.
Well, yeah, and I think we've seen good mix for the markets in the last 3 weeks specifically. So when you see market breadth improving, sector trends shaping up, there is hardly a point, because the markets have a tendency to factor in a major part of the expected news flow. Only something which has been unexpected or something which comes out out of the blue. I think that's the only factor which the markets generally take a surprise hit. But I think looking at the way the stance has changed from the FIIs, the calm which the markets have been showing, sector patterns, etc., I think we should be in for much more upside.
Right. CA, what's your take coming in on the markets? Very good afternoon to you. Given the fact that, yes, we've seen a sustainable bounce back, at least for the markets, FIs are buying, and that's also a good sign if you look at it. But what's your take? Which is the one sector that you think will lead the markets higher going ahead?
Good afternoon. Thank you so much for having me in the show. See, market has definitely turned into buy on dips from that earlier sell on rise. And every dip is a buying opportunity in this market. So for me, Nifty specifically, if you want to look at the levels, 23,800 will be the first level. And once we cross that, surely we are headed towards 24,200 and 24,700. Similarly, on Bank Nifty, if you see, 51,000 will be the immediate support now, and we are headed towards 53,500. This market has just now turned FII buyers, and we have already seen that move of 1,500 points plus on Nifty. But this move is to stay, and I am very, very bullish on market. To answer that sector which can do good, for me, private banks and NBFC will be the top sector which will do very, very good. So whether it is HDFC Bank or even Kotak Bank, ICICI Bank, even after the move what you have seen in last 2 weeks, all the dips has to be bought in private bank, and in NBFC it's a choice whether you want to go for Chola Finance or even for that matter, Bajaj Finance.
Sorry to
and even
interrupt you,
Shriram.
CA. I'll come back to you. Rudra, I'll just come back to you. Let's just head across to Times Now Summit, where you have the BSC, the head, talking right now.
The income earning age, and therefore increase the consumption. Consumption is a very important part of an economic well-being and to keep the wheels of economy running. Keeping this in mind, our Honorable Finance Minister in the last budget released and put in hands of the retailers around 1 lakh crores so that when consumption gets boosted, manufacturing and all the other allied activities get a boost. When you manufacture more than what you consume, you export, that becomes the next very important leg of growth for any country, and we are extremely doing well. For all this, you require a manufacturing activity to happen, and that is where the investments come in. In all these fronts, India is doing wonderfully well. The demographic profile of India, which I refer to, augments very well in all these areas. India saves around 30% of its GDP. Presume even 25% of it is going to come into the capital markets. We are talking about around 150 lakh crores per annum coming into the capital market. The market cap at this point of time in India is around $5 trillion US. This has grown by 118 times in the last 10 years, a CAGR of 17%. You have seen that there is a relationship between GDP and market cap. Typically, the relationship hovers somewhere between 1 to 1.5. If that relationship is even now maintained, if you look at that and if it is going to continue, by 2047, we are talking about a market cap somewhere hovering around 40 to 50 trillion. Where this market cap will come from? Will it be only from the existing companies? Not necessarily. More and more companies are going to come in from various emerging sectors in India, making it one of the largest economies. This is where the role of BSE becomes very important. While Times Now is celebrating 20 years, we are happy to tell that BSE is celebrating its 150th year this year. It's a very happy moment for us. What has been the role of BSE in all its 150 years of existence for the growth of Indian economy? BSE has helped significantly in the formation of capital, ensuring liquidity of the capital raised, transparency in the market operations, ensuring corporate governance, and providing tools for risk management, in all ensuring and building trust in the market. In this committed service of 150 years to the market, BSE has ensured the emergence of multiple sectors, multiple big companies and corporates, and in all helped in democratizing the access to the markets and access to the information so that more and more investors can participate significantly and meaningfully in the building of nation.
All right, in conversation with CA Rudramurthy, Sandip Sabharwal and Kunal Botra. Flash that Aramco wants to supply, what is this? Aramco wants to
Invest in Indian refiners.
ये कितने साल से बोल रहे हैं यार? I mean, they've spoken to Reliance and they've been coming here and there. Let's look at Reliance, HPCL, BPCL. It's not that easy, right?
So this time what they're saying is they are in talks to invest in ONGC's plant Gujarat refinery and also eyeing BPCL's plant Andhra Pradesh refinery.
It's not that easy, no? I mean, these are not very small bilateral agreements which happen. A stake sale coming in, government companies. What I have never seen stake sales happen in government companies and subsidiaries. The one which happened, I think, was one with BP. British Petroleum. Just search for it. I think British Petroleum 2001, some Panna Tapti, something which happened. The British Petroleum came as a technology partner. And then you had something with ONGC and Global, and then the Imperial was one, and then I think BPCL had one global acquisition which we've forgotten about. So okay, let's see when it happens. I hope it happens. 23,600 and 100 points are for the Nifty. Sandip, that brings me to the broader point now. The bargains are over. Markets are neutral. Now it's about finding pockets where earnings could continue, earnings could surprise, or compounding could happen. Any thoughts on where we are in for a steady set of earnings, where compounding or the compounding will continue and earning momentum will stay intact? Sandip?
If you look at the large cap side, I think financial should continue to do well. I think where we could see greater delta in terms of performance could be the NBFCs, where easing monetary policy always benefits them more than the large banks. So I think that's where momentum could continue. So I think Bajaj Finance is one stock which has already done well. A lot of the other NBFCs have somewhat lagged behind, and I think we could see a catch up out there. Many construction companies also are seeing good order flows now, and execution cycle will pick up, and they also benefit from lower interest rates. So for example, one stock we hold, NCC, I think over the last 10-15 days itself, they have won 15,000 crores of orders, and valuations have come down from, like, I think from 350, the stock's fallen to 200. So valuations have become reasonable. So I think some of the companies in capital goods infra could also do well. And overall, if I look at the large cap basket, I think except for IT stocks where the outlook is hazy, rest of the large cap space looks fine to me in terms of performing and doing reasonably well. And pharma could have some short-term aberration if some tariffs and all come. But given the fact that it's not easily, what they are making is not easily replicable at the cost at which they make, in all probability, the costs will just be passed through and the impact will only be short-term.
Sandip, there is this whole thought that, and just look at it actually, which is that the decline in Zomato, Kunal, and I'm going to ask everybody this question. See, Rudramurthy, can you hear me? I'm coming to you on this question. Okay, first I want to mark the point here that Avenue Supermart has started rising and Zomato has started falling. Swiggy, frankly, has been a no-go after IPO. And this entire halabaloo, that's the right word, this entire halabaloo which happened in the quick commerce space, more competition, no delivery, is now hurting these companies. DMart comes out and says that we will invest little in quick commerce, but we want to focus on what we understand, which is the big box retail. And look at what markets are telling you. Zomato is down 30% from the high. DMart is up about 20% from the recent low?
Approximately
20%. So Sandip, time to flip out of quick commerce, go back to value retail, because whatever we may argue, ultimately in India, the kirana wala never goes.
We can flip out if we have it. If you don't have it, you can't flip out. The fact of the matter is that the allocation of capital of these companies is very bad. I think look at Zomato or Swiggy. So I think they make big money out of their food business, and they're investing in a business where the returns are going to be low, like the quick commerce, and disproportionate money is going there, and competitive intensity is very high. So I think it's going to be a tough phase, and it coming into the Nifty also distorts Nifty valuations because there is going to be no earning for some time. Like the biggest concern for DMart, Avenue Supermarts, was that they are not recognizing the change, that they need to participate in quick commerce and they need to have some setup where they can compete with these guys. So I think given the fact that recent commentary indicates that they are taking steps to address this, I think market has started rewarding that somewhat.
That whole point. So if somebody has Zomato, move to Avenue Supermart, and if you don't have Avenue Supermart, buy it, or any, for that matter, any value retail. I'm just trying to put that point.
No, I think Avenue Supermart's valuations still are excessive. So given the growth rate which they've been showing, so I'm not a buyer there. But I would say that yes, moving out of Swiggy, Zomato into some other stock, like there's a whole market, right? You don't need to be in that space itself. So then and that makes sense. I think these companies are still going to have a tough time for the next 1 year at least, before maybe realization comes that just just burning up capital again makes no sense.
Rudra, what's your view coming in on this one, the entire pack? Will it be Avenue Supermarts that you want to look at, or is it going to be still you want to be with the quick commerce space? You have now notes actually coming out, brokerage notes that have downgraded these counters, like you had Bank of America yesterday downgrading Zomato to a neutral from an erstwhile buy position. Swiggy also, they've downgraded to underperform from a buy position and cut the target price as well. For you, do you think that you will look at these players, or will you look at Avenue Supermart once again?
No, on charts, very clear view that Zomato has broken even that support at 203, 205 zones, and it is just continuously falling. And for me, 180 is the next support on Zomato, and it should reach there. For sure, purely based on chart, I will switch from Zomato to Avenue Supermart if you have positions in Zomato. And other way around, if you see the chart patterns in Avenue Supermart, definitely it is making that rounding bottom formation, and now the breakout is coming. So if it sustains above levels of 4,100, a sharp up move towards that 4,500 and 4,800 cannot be ruled out. So purely based on chart, definitely a yes, switch from Zomato to Avenue Supermart. But there are a lot more other shares which are of mouth-watering valuation also right now. And charts are also beautiful, where you can pick up stocks like, let us say, GAIL looks very, very strong to me at current market price. And the strong support for the stock is at around 170. Current market price still gives me comfort, both in terms of fundamental valuation and also on chart. Similarly, if I have to pick something from metals, Jindal still looks very, very strong to me at current market price of about 900. So you have sector specific and stock specific opportunities available, like some of them which I mentioned. But surely I will switch from Zomato to Avenue Supermart if I have to make a choice within these two.
We're discussing L&T in the morning. I think Kunal feels that it's moving out of the neutral territory. Sandeep's been making this point for a while that, go look at L&T, look at L&T. And I think BNP Paribas and CLSA, they both made this point that look at L&T.
Yeah, you were discussing in the morning.
We were discussing it in the morning. Another interesting one, which is HDFC Bank, BOFA, right?
Yes. No, it was Citi. 90-day catalyst watch, positive catalyst watch, HDFC Bank. And that one has actually moved up higher also in trade today.
Sandeep, is it time now to go back to this erstwhile FI favorite, HDFC Bank, ICICI Bank? I mean, typically, you know that when FIs come, what they will buy and how they will buy.
Yeah, if FI flows continue positively, then obviously the biggest allocation goes to the financials. And typically, like you rightly said, HDFC, ICICI have been the favorites, and then to a lesser extent, Kotak, Axis, and possibly SBI also. So I think if the call is that foreign inflows will sustain, then financials have to do well.
That's the view coming in on the erstwhile FI favorite, HDFC Bank. But on that note, thank you so much, Sandeep, for being part of the show and actually sharing your views in the closing trades. But coming to you, Kunal, let me get your closing trades for all of our viewers.
So bullish on Bank Nifty, and that's why I would pick HDFC Bank as a fresh breakout candidate today, especially with the stock breaking past above the series of the last 3 to 4 days of closing high.
All right, so it's HDFC Bank closing trade pick coming in for Kunal. Rudra, what's your closing trade?
So for me, GAIL looks very, very strong. Buy at current market price. One can definitely buy even in futures. Looking at targets of around 200, 210 to come over a period of a month or two. But then even for very short term, GAIL looks very, very positive. With a stop loss of 170, definitely one can take positions in future for April month.